28,000 of those, Scott. That volume has been building since then. I'm in these, and I was already in target shares. I'll probably hold the position for another 2 to 3 weeks. Second trade, Teva. Teva Pharmaceutical, this was much bigger, but it's a cheaper stock. They were buying 26,000 calls. Also in February at the 12 strike, stock was, I think, $10.25 at the time. It's been moving up. The volume has been building. This is institutional buying, Scott, so I love that. I think both move higher, and like I say, I'll probably be in both 2 to 3 weeks.
Okay, Target, Teva, appreciate it. Doc, thank you. Coming up, gold prices hitting levels not seen in a couple of months. We'll find out how the futures traders are playing that. We'll do it next.
Wherever you start, SNHU is where you can finish.
Here we go.
And it's it.
Yay! Southern New Hampshire University.
That gets a hope.
Look at that! Master's degree! I did it! I did this for my children. I am very proud of myself.
Finish your degree at snhu.edu.
You are busy, working, parenting, problem solving. At New Chapter Vitamins, we've been busy too, innovating, sourcing organic ingredients, testing them, and fermenting.
Fermenting?
Yeah, like kombucha for yogurt. And we formulate everything so your body can really, truly absorb the natural goodness. That's what we do, so you can do you. New Chapter, wellness well done.
Guys, living on junk food? Stop. Eat real food that tastes great and lose weight with Nutrisystem for Men.
You just select, heat, and eat, and you're going to lose the weight.
Lose up to 13 pounds your first month. Money back guaranteed. Check us out today.
Heat up the food. That's it.
Act now and save 50% off a month of food and 50% off a month of shakes.
Go online or call 888-621-FIT9 to save 50% on a month of food and shakes.
At C3.ai, we're solving previously unsolvable problems. Inventory optimization, predictive maintenance, anti-money laundering, operational readiness, precision healthcare, energy management. C3.ai is AI built to transform your business at its core. C3.ai, this is Enterprise AI.
Let's do the futures outlook now. Gold is hitting its highest level since early November. Let's bring in Bill Baruch, Brian Stutland. All right, gentlemen, Happy New Year to you both. Stutz, tell me first, what's the trade?
Well, I think two things are going on with gold here, Scott. And number one is M2 money supply. We continue to see outsized moves to the upside. We know it's increasing, but it's moving faster, upside. Why? I believe in them because they save lives, but it's not so good for fiat currency. That's why gold's getting a bid. And then, Scott, the other thing, you know, we're really in a sad state of affairs right now. The country is turning into a republic at best, maybe an authoritarian at worst. That's not good for the U.S. dollar. I don't think people like that. That's why we're seeing bids in gold and Bitcoin, other fiat currencies. Personally, I own Bitcoin. I like that a little better than gold, but I think you've got to make some way for the anti-fiat currency trade until we get things back to normal, till we get liberty back in this country like we once saw, and see a democratic true state.
Bill Baruch.
Thanks, Scott. You know, I was on here last Thursday. I've been on here a lot over 2020. I love gold. I said on Thursday at 1900, just buy it. Get long gold. And we broke out above that trend line. We've been waiting for big rip higher to start the week. Now, there's a lot of things here at play. Obviously, the U.S. dollar weakness, and then you got the Chinese yuan strength, and you got good seasonals. But one thing I haven't discussed is the supply-demand technicals. And right now, the commitment of traders are showing a net long managed money position. These are the traders, the commodity funds, of only 108,000 contracts. The peak last year came in February, not on August, but it came in February, 240,000 contracts. This tells me there is a lot of room for the bulls to buy gold and take it to new record highs.
Gentlemen, good to see you. Thanks so much. We'll talk to you again soon. Final trades after this quick break.
Futures Outlook is sponsored by CME Group and Interactive Brokers.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. A single integrated account gives you access to the world. Navigate evolving markets with confidence using Interactive Brokers' cutting-edge technology and powerful analytics platform. Interactive Brokers, now offering CME Group Micro E-mini futures contracts with small size, puts you in command. Start investing today at interactivebrokers.com.
And now a mini meditation. Inhale serenity. Exhale whatever's happening here. Now bring your focus back to your customer, Tom. Salesforce Customer 360 helps you focus with a single view of your customer. Like Tom.
Who's Tom?
Ted Danson.
You do realize I'm lost, right?
Kevin O'Leary.
I like money.
He's Mr. Wonderful.
There's only one Mr. Wonderful.
He's Mr. Mayor.
As mayor,
You're not the mayor. I'm the mayor.
One runs big business.
This is the Shark Tank. There's nothing else like it on Earth.
The other runs a big city.
You ran for mayor to impress your daughter?
You don't want to miss these misters in action. Mr. Mayor premieres Thursday on NBC.
Yeah!
And watch Shark Tank weeknights. CNBC. Get yours.
I'm embarrassed to admit it, but I can't tell you the last time I looked at my credit card statement. Hi, I'm Yaya, founder of Truebill, a simple app to help you stay on top of your spending, save money, and make sense of your finances. It's an automated accountant for busy people. Download Truebill today.
Egypt Cancer Network is a U.S.-based nonprofit organization that supports the treatment of pediatric cancer patients for free at the Children's Cancer Hospital in Egypt, 57357, the most advanced pediatric cancer hospital in the region, providing free cancer treatment to thousands of children. Please call 877-573-5757 or go to egyptcancernetwork.org.
The long bull market since 2009 has finally matured into a full-fledged epic bubble, featuring extreme overvaluation, explosive price increases, frenzied issuance, and hysterically speculative investor behavior. I believe this event will be recorded as one of the great bubbles of financial history, right along with the South Sea bubble, 1929 and 2000. People are snarky on Twitter about this call. I get it, okay? But what do you think about what Mr. Grantham is saying, what he wrote in the last few days?
Well, he says it every year, so I have a lot of respect for Mr. Grantham and the discipline process at GMO, but quite frankly, they aren't making investors money and haven't been for a long time. Their assets have been cut in half since 2015. They refuse to accept the fact that stocks are being valued on something other than what they were being valued based on 100 years ago. And that's been costly. So, look, he's the guy that saw in advance the dot-com blow-up and arguably the 2008 blow-up. But even if you had ridden a portfolio through that, a diversified portfolio, 60-40, 50-50, you were still better off than having jumped out ahead of those things and then listened to GMO ever since and missed all of the upside now. So I think it's like an investment philosophy question. Do you really believe that somebody can reliably know when to sell and then when to get back in? Most people can't do it. GMO clearly can't do it. So if that's in your philosophy, then this is meaningful to you. And if it's not, then you just accept the fact. One day the market will top, and it'll be painful.
Give me
but
a quick,
we don't know when that will be.
Everybody just give me a name before we go. Josh, go first, then Tiffany, John, and Steph. Go ahead, Josh.
I'm sticking with Uber this year. I think it's going to have a good year.
Tiff?
Nexter Energy, clean energy.
John?
Boeing.
Steph?
Halliburton Oil Service.
All right, good stuff. Thanks for watching. The Exchange begins right now.
Thank you, Scott. Hi, everybody, and welcome to The Exchange. I'm Kelly Evans, and investors are anxiously waiting for the results of the Georgia Senate race. The outcome could impact everything from big tech to energy stocks to banks and infrastructure. We will break it all down. Plus, Morgan Stanley says the Fed will announce tapering this year, and one prominent Fed member says it's on the table. Could it lead to a taper tantrum like it did in 2013? And is Bitcoin's rally just a repeat of 2017? One expert says it's different this time because of the big money. He'll join us, but we start with the markets this hour. Mike Santoli has more on that. Hi, Mike.
Hi, Kelly. Yeah, markets moving kind of in lockstep all across the indexes, up about 0.5%. Guess what? Yesterday they were down about 1.5%, pretty much in harmony. Shows you we're regaining about a third of yesterday's losses. Look at the S&P 500 though over the last few months. This little shakeout we got yesterday didn't really disturb what's been going on for at least a month or so. December 4th closed at 36.99. January 4th closed at 3,700. Under the surface, there's been a lot of churn. A lot of stocks actually down a fair bit from their high. So maybe this has just been a refreshing consolidation or a start of a new choppy phase. Take a look here at energy and materials. This stuff's moving. Obviously, crude's higher, above $50 a barrel, WTI, OPEC meeting. But also, there's been a global reflationary sentiment out there, inflation expectations going up, and you do have all commodities running, especially miners related to gold and silver. And then take a look at the Treasury yields. It's part of the same story. As you know, Kelly, really good ISM number this morning is nudging these yields higher. 10-year yield, 0.96. This was your high back in November, about 0.98 as a close. So pretty much that trend remains intact as well.
That 0.96%, I mean, that was a scorching number, so we're definitely going to be watching that. Mike, thank you for now. We appreciate it, Mike Santoli. Today's runoff election in Georgia has turned into one of the most expensive Senate races in history. Let's get to Elon Moy now with a look at the industries and companies that are pouring money into this high-stakes election. Elon?
Well, Kelly, the numbers really are staggering. If you add up how much the candidates themselves had raised and then add in all the outside money, the total amount that has been spent on these two races is over $880 million, according to the Center for Responsive Politics. So let's break that number down. Here's how much was donated directly to the candidates. The GOP incumbent Senator David Perdue has raised $89 million, but his challenger Jon Ossoff has pulled in a whopping $138 million. Meanwhile, Republican Senator Kelly Loeffler has received $92 million compared to Democrat Raphael Warnock with $124 million. Now, the industries that are driving those numbers are also very different. For Democrats, the top sectors are education, law firms, and tech companies. For Republicans, it's all about real estate companies and investment firms, though interestingly, the healthcare sector has been a major donor to both parties. Now, when you start to look at some of the outside money, the dynamics start to change because most of that has been deployed on behalf of the Republicans. The National Association of Realtors and the American Bankers Association together have spent millions of dollars in support of Senator Perdue. And then, of course, there's the Georgia Victory Fund, which was set up to help Senator Loeffler's campaign. Her husband, Jeffrey Sprecher, who runs the New York Stock Exchange, is one of the major donors there, and that fund has spent $18 million on her race. Kelly?
You know, it's interesting to dwell on each of these sometimes, Elon. I mean, the National Association of Realtors pouring money in than the bank, more than the banking group. What are you hearing, or what do we know at this point about how this may be tilting the outcome? And, you know, where are we right now on what many people have been calling a coin toss?
Yeah, you would think that the money would go where the winning candidate might be, but it's really not clear that all of the money that's sloshing around here is going to make a difference at the end of the day. What we saw in the general election back in November was that Democrats outspent Republicans almost 2-to-1. Overall, Democrats spent about $6.9 billion compared to Republicans spending $3.8 billion. But the blue wave that Democrats spent all that money in hoping to achieve, it didn't materialize. They won the White House, but they lost some seats in the House, and now we're down to this coin toss in the Senate. So it is unclear what the return on investment for all of this money might be.
It's true. It was a big reflection point since already for the last several weeks. Elon, we appreciate it. We'll check back in with you soon. Elon Moy is watching the Senate race for us. For more on what's at stake as Georgia tallies its votes, I'm joined now by James Pethokoukis. He's economic policy analyst at the American Enterprise Institute and a CNBC contributor. Jimmy, you had a great note the other day that really boiled it down because a lot of people have been looking past this event, interestingly. I mean, yes, it's getting a lot of play, but at the same time, maybe not as much as you would think, given that, you know, we have the Senate hanging in the balance. Tell us what you think some of the kind of big differences might be based on who retains control.
I'll tell you, if Republicans win one of these seats and they maintain control of the Senate, then I think the biggest macro thing accomplished by Congress for 2021 already just happened. That would be the $900 billion stimulus. I don't think anything will happen over the next 2 years that will be anywhere close to as important as that stimulus. I'm extremely skeptical of any kind of grand bargain between Biden and Mitch McConnell, even on things like infrastructure. Maybe something, but I just don't think it's going to be that big. On the other hand, Democrats take those seats, and now all of a sudden you have kind of the mini blue wave situation reemerges. Then listen, you're talking probably another stimulus package. Maybe that's $500, $600 billion. Still a lot of money. You're talking some tax hikes, not through the roof, but not insignificant tax hikes, and probably a pretty big infrastructure plan. Those are two, I think, starkly different outcomes.
Yeah, and so as you put it, it's the difference between tax hikes and no tax hikes, public option or no public option, Section 230 reform or no reform, big infrastructure, maybe no infrastructure, stimulus or no more stimulus. Do markets care more about, tax hikes or stimulus? That's also the question kind of hanging in the balance here. It's one of these events that, I guess, between the closeness of the outcome and just how big those policy moves could be over time, it's going to take markets some time to digest this. Are we even going to know tonight who the winner is?
Well, certainly if it's a repeat of what we saw in November, we have many hours, days of if it's going to be that close, and it very well might be that close. So right, it may take some time to digest it, but I think, listen, no matter which way it goes, even if Democrats take these two seats, it's still a very narrow Senate and a very narrow House. So who will be sort of that median Democratic senator? Well, listen, it's going to be somebody like Kristen Sinema in Arizona, Mark Kelly, Joe Manchin. That is going to prevent some of these kind of wilder ideas, totally getting rid of all the Trump tax cuts, taking the corporate tax rate up to 35%, the total Green New Deal. That kind of wilder stuff, I think, is off the table either way. Still, what could change is significant.
Yeah. And finally, who do you think, I mean, again, just watching the polls for whatever they're worth, the predicted odds, Twitter, what is your spidey
Nothing's
sense
more
telling
important
you
than what Twitter is
about?
saying. I think we can acknowledge that.
Yeah. Well, so what feeling are you getting here, as we've seen some of the really long lines, the heavy turnout, and maybe some questions about how strong the turnout will be on the GOP side?
Right. From everything I hear, Democrats are not confident they're going to win this. I realize the 538 polls show Democrats doing better. I think that, especially after what just happened, everyone's going to be super cautious about predicting a Democratic win here. And listen, I thought the betting markets did pretty good, 2 months ago. They show the Republicans winning, and I think that's not, to me, that's not an insignificant data point, but pretty close.
Yeah, pretty close. That does seem where we are this afternoon. It could be exciting to watch it come in. Jimmy, thank you so much. James Pethokoukis from AEI. So who stands to benefit from the possible outcomes for Senate control? My next guest is here to say which sectors could win big if the GOP retains control and which would be better off with a Democratic sweep. Joining me now is Chris Senek. He's Wolfe Research Chief Investment Strategist. And Chris, it's very interesting to juxtapose what you're about to say with what Elon just told us. So for instance, tech has been one of the industries pouring money in on the Democratic side of the race. However, under what you're saying, tech could actually do better if the GOP retains control. Explain.
Yeah, indeed. Tech stocks have been one of the biggest beneficiaries of the prolific Fed liquidity that we've seen since the COVID crisis began. And if the Dems win both seats, expectations will rise markedly for a big physical stimulus program. And that big physical stimulus program benefits, we think, some of the more beaten up areas of the market, and in particular value stocks, regional banks, because yields will likely back up into spending concerns and higher debt. And so, and furthermore, potential tax increases could cause investors to sell some of the biggest winners since the pandemic began.
So let's go through this one at a time. We can show what you think are the outcomes here if the GOP holds the Senate. For investing style, you think growth. And again, I think some of this would be counterintuitive to people. If you say if the GOP holds the Senate, the investing style is growth. Rates are range-bound. The sector winners are big tech, managed care. Yes, or the oil sector makes more sense. You say, you know, on the flip side, if Democrats take control, and you were just alluding to this, then value wins. The yield curve steepens. And regional banks, you know, those could do better. Yes, you know, green energy, electric vehicles a little bit less surprising, but, you know, explain what the difference is here.
Yeah, it's really the toggle between physical policy and the Fed, right? So if, as your prior guest alluded to, if the GOP holds the Senate, they're going to be very stingy in terms of physical stimulus. They're only going to do it if they really need it and the economy slows. And so who's going to make up for that will be the Fed. So the Fed, we think, if the GOP holds both seats or one seat, will likely upsize their asset purchase program sometime in the first quarter. That favors the bubble type high valuation growth stocks led by the NASDAQ 100. Healthcare will be a relief rally because there won't be any big changes with healthcare, in particular managed care. On the other hand, if the Dems take both seats and we have so-called blue wave, we expect expectations for physical to increase markedly. Yields are likely to back up. Steeper yield curve benefits regional banks. There'll likely be an infrastructure bill at some point, or they'll be part and parcel of a bigger bill. Green and clean will work as well as part of that. And, you know, people probably will sell the traditional energy refiners and stocks that are up into higher oil prices today. So it's about the Fed versus physical being the driver underneath the surface.
Yeah, 100%. And again, to mention a lot of this would be kind of the knee-jerk reaction. I'm sure, you know, as we move throughout the year and different levers are pulled, that there are other reasons why you might want exposure to some of these areas. So, you know, for instance, thinking through the ISM number this morning, which without any other stimulus, you know, on tap, you wonder, you know, how much more the Fed would need to do. I mean, could you see a scenario, or even fiscal will need to do? So could you see a scenario in which, you know, we could get a yield curve steepening either way, you know, even if it's a GOP control?
We could, and that's the risk, you know, with some of these high multiple stocks here, is we do have a rate scare. Now, we think the Fed is going to try to contain rates and below that kind of 1% 10-year yield magical level if they can, and there's methods they can do that with yield curve control or doing a twist type strategy in a meeting later in the spring. And remember, there's 1.5 trillion of excess savings out there, and so we could have a scenario, even without additional stimulus, where the economy in late spring, early summer is really humming along, and that could favor all types of stocks. But I do think that would probably be more of a value rally if the Dems take both seats in the Georgia elections.
All right. Chris Senek, thank you, sir. With some picks for each outcome that we could see as we tally the votes tonight. Chris Senek of Wolfe Research. If you're looking for more stock picks, CNBC Pro has BTIG's favorite names for 2021. They include the likes of Uber and Lordstown Motors. You can get the full list at cnbc.com/pro. We have a news alert on OPEC now. Brian Sullivan joins us by phone. What's going on, Brian?
Hey, Kelly. Yeah, and if I have to pop off because I'm on the OPEC press conference virtually, of course, right now, the Saudis shocking everybody and announcing a 1 million barrel a day surprise cut. The Saudi minister, Prince Abdulaziz, joked at the beginning that he had a surprise for the meeting, and he wasn't kidding. So they're coming out, they're cutting by an additional 1 million barrels a day. Now, others will be increasing production, but oil is soaring right now. Oil stocks are soaring right now. Nobody saw this coming. I mean, OPEC generally, there's leaks all the time, and we tend to report on things that are being whispered about. It's a lot harder to do that virtually, Kelly. We are seeing the price of oil, which is up 5% right now. The XOP ETF is up 8%. The XLE is up 6%. Some of the more heavily shorted names up 9 and 10% as well. So the Saudis doing this unilaterally, meaning they did it on their own. They called it basically a gift to show solidarity. And in fact, the Russian minister called it a New Year's gift and actually briefly smiled. That if you know Alexander Novak, the deputy prime minister, that's a rarity because they're going to increase production slightly along with Kazakhstan. But the Saudis, a big cut, shocking the market. Little OPEC New Year's surprise, Kelly.
Brian, it's kind of hard to believe that Saudi Arabia would willingly cut 1 million barrels of its own output and just say, yeah, it's a gift to the world. Happy New Year. I mean, maybe they look to the oil price reaction. We have WTI above $50 for the first time since February. But Brent obviously would be more of their focus. But maybe they look at the oil price and think they're going to make up, the declines in the price. It just seems like there has to be more to the story.
There is more to the story, as always. And I'm going to get a little deep here very quickly. Again, I may have to hop off. Remember this. Okay, the Russians want to increase production in part because they are angry at the United States and certain senators for opposing their Nord Stream 2 pipeline, which is going to be a huge conduit of natural gas to Germany. Leading the charge against the Nord Stream is one Senator Ted Cruz. Ted Cruz is from where? Texas. So it's not OPEC versus Texas. It might be Russia versus the Texas/Ted Cruz because he's been so vocally opposed. The point is, Russia doesn't mind gaining market share, increasing production, even if they have to drive the price down because, A, they want the market share, but B, it's also kind of a message, if you will, to the United States that they don't mind shoving it a little bit in the nose of the U.S. and sort of our oil interests as well. I think the Saudis have to play it a little more delicately, especially with the incoming Biden administration. So the Russians get what they want. They get to raise production by, I think it's 120,000 barrels a day, while the Saudis can sort of look to the United States and say, look what we did. We're trying to keep prices semi-firm. So kind of a masterful political move by the Saudis as well. The Russians, Senator Ted Cruz as well. There's a lot going on, as always, in OPEC. It is truly a geopolitical mystery of epic proportions, but the Saudis are the ones pulling out the Professor Plum in the library with the candlestick by dropping that 1 million barrel a day cut on the market, which nobody expected, and stocks and oil are flying.
They are. We're showing Exxon up 7%, BP up 8.5%. The ETF is up 7-8% at this point. Chevron, Conoco, we just showed Occidental. The Marathon's up 13%. Wow, some pretty big news. Brian, thank you so much for bringing it to us, and keep us posted if you get more on that call.
Sure.
Our Brian Sullivan with the latest on OPEC's and Saudi's surprising decision to cut production by 1 million barrels a day. We'll keep tabs on that. Coming up, to trim or not to trim, the Fed's massive bond buying program could see a slowdown this year as economic activity improves. ISM manufacturing hitting a 2.5-year high today. How will the market react? We'll ask Morgan Stanley's chief economist. Plus, the NYSE reversing its decision to delist 3 China telco stocks in a move that some are calling confusing and even bizarre. What happened and what's it telling us? We're back in a couple.
This is The Exchange on CNBC.
You need the right pieces in your portfolio to preserve capital, diversify to mitigate risk, provide liquidity, while delivering returns. Gold, your strategic advantage.
Winning Motor Trend Truck of the Year 3 times in a row, that had never been done before. Then again, neither had a 12-inch touchscreen or 1,000 pound-feet of torque, or a truck winning Luxury Car of the Year. So winning once will always be a proud moment. Twice, an accomplishment. 3 times, well, never been done before. It's just kind of our thing.
Now get $6,300 in total values plus $500 bonus cash on the 2021 Ram 1500.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from a resume database. Claim your $75 credit when you post your first job at Indeed.com/home.
So you're thinking of buying a new home this year? The surge is, well, not where it normally is.
It's the middle that's the new star. Much of it likely to do with the pandemic and the ability to work from anywhere now.
From testing to tracing and mapping the genome, What do we need to do as a nation to catch up?
We have to vaccinate 3/4 of the U.S. population by the end of the summer in order to stop virus transmission.
The facts, the truth, the news with Shepard Smith. Weeknight, 7 Eastern, CNBC.
Medical school is very stressful. I lost a lot of hair during that time. Nutrafol is 100% drug-free and it's natural. You can't argue with clinical proof. Start your hair growth journey at Nutrafol.com.
It was so stupid. What was it doing? You were just...
Ancient Egypt have great civilization, but the pharaohs suffered of cancer. Today, we have a new pyramid in Egypt. 357 children, Cancer Hospital, Egypt. Your donation is very important to help in a child cure. It will change the tears on the faces of the children to a smile. Zahi Hawas.
Welcome back to The Exchange. The ISM manufacturing gauge jumped in December to its highest level since August of 2018. It was above 60. It's adding more support to expectations of a V-shaped recovery. It comes as Atlanta Fed President Raphael Bostic says the Fed could start trimming its bond buying program as early as this year. How likely is a taper this year, and will it lead to another tantrum? Joining me now is Ellen Zentner. She's chief U.S. economist at Morgan Stanley. Ellen, it's great to see you again. What's your base case expectation for any kind of tapering right now?
So I think that definitely President Bostic is still in the minority at the FOMC, but definitely expressing more optimism, especially as we've seen the efficacy of the vaccine now, even with some baubles of it being rolled out on time here in the beginning of that process. And so I think at some point, certainly by the middle of this year, we would expect policymakers to sort of coalesce around firming up those discussions of when should they start tapering. And so we think that they'll start tapering in the beginning of 2022, which means signaling it at the December meeting. And certainly depending on how the vaccine plays out and how the economic activity rebounds on the other side of that, can certainly shade that by a month or two in either direction. So to me, Bostic's comments were not that inconsistent with what the market is currently expecting in terms of the timing of tapering. What struck me as very surprising was that he said he wanted to get back to a pre-COVID balance sheet in short order. And it's the pace of that tapering that I think would be very surprising.
I mean, it seems impossible that they'll ever be back to a pre-COVID balance sheet, Ellen, let alone in short order. And Loretta Mester of the Cleveland Fed did come out and say she's not expecting a reduction in bond buying until next year. So you can see this battle is already starting to play out. We are seeing interest rates slightly on the rise, you know, with the 10-year today, again, emphasize slightly up to about 96 basis points or so. What would happen if markets started to sniff out that maybe the Fed's going to be under some pressure to turn the dial back more quickly?
So I think for the Fed, the balance sheet is going to actually be very important in terms of anchoring those rate hike expectations. They have to not only begin tapering the balance sheet, but finish that process well before they begin raising rates. That's the order of operations that is currently in the framework of the Fed. And so how long they want to take to taper the balance sheet, when they want to start to tapering the balance sheet, you know, that means that they can start to take their foot off the gas pedal, to use a favorite phrase of former Fed Chair Yellen's, take their foot off the gas pedal, but still control rates and rate expectations, because the market's going to not be willing to price in rate hikes until they actually finish tapering. And so I think that separation between balance sheet operations and rate hikes is very important for the Fed to maintain. And I do feel like the market remembers the lesson learned from the taper tantrum, as does the Fed. And I do think that they can successfully separate the two.
Well, you know, you're right in that sense, but it still is going to be a tough dance, I guess, to pull off smoothly for the next year or two. So the real question, I guess, becomes how do they respond if the market seems displeased with that, right? You know, what's more important, making sure there's not a policy mistake of prematurely tightening, which we think is the bigger takeaway from this Fed, or making sure that we're not creating, you know, bigger problems with asset bubbles and, you know, stock market valuations and other, you know, asset prices being where they are today. You know, is that something that they would be willing or need to lean against?
Yeah, so I think you're getting right at the heart of it, Kelly, because this is going to be a struggle for them over the next couple of years in terms of how they communicate around this. You know, there is the idea out there that the Fed will not allow long-term interest rates to rise because they want to keep financial conditions easy. They want to continue to affect as robust a recovery as possible in order to meet that inflation goal, their unemployment goal. But the idea that they can't let the 10-year rise at all is just false. You know, the 10-year yield should be rising if you have a stronger economy, stronger fundamental backdrop. It means that yields can increase without hampering growth in the economy. And so naturally, expectations for tapering should come forward. Naturally, rate hike expectations should come forward as we start to bear the fruits of our labor in terms of getting the vaccine rolled out, seeing that rebound on the other side of that, and being convinced it will continue. And so the Fed has to have a certain amount of appetite for rates to rise. They just can't rise too much too quickly for the Fed, or else they'll have to continue to communicate and talk down both the financial stability risks and the risks of rates rising too soon.
It's a great point. You know, we knew we were going to see this tension play out this year. I just didn't think it would start this soon on January 5th. But here we are. Ellen, thanks so much. We appreciate it. Ellen Zentner is with Morgan Stanley. Coming up, this ain't 2017. We're going to look at why the recent rally in Bitcoin is different now than it was back then, and what the money flows are telling us about what happens next. Plus, a more than 400% rally last year just isn't enough for Stifel. Why they think Peloton has more room to run even if the pandemic ends. We're back in a couple.
10 years ago, we found a Loan Depot because we were confident we could deliver the American dream of home ownership to individuals and families across the nation. At Loan Depot, we know home means everything.
Some things are good to know, like where to find the cheapest gas in town and which supermarket gives you the most bang for your buck. Something else that's good to know? If you have Medicare and Medicaid, you may be able to get more health care benefits through a Humana Medicare Advantage plan. Call the number on your screen now and speak to a licensed Humana sales agent to see if you qualify. Learn about plans that could give you more health care benefits than you have today. Depending on the plan you choose, you could have your doctor, hospital, and prescription drug coverage in one convenient plan. From Humana, a company with nearly 60 years of experience in the healthcare industry. You'll have lots of doctors and specialists to choose from. And if you have Medicare and Medicaid, a Humana plan may give you other important benefits. Depending on where you live, they could include dental, vision, and hearing coverage. You may also get rides to plan-approved locations, home-delivered meals after an inpatient hospital stay, a monthly allowance for purchasing healthy food and beverages, plus an allowance for health and wellness items. Everything from over-the-counter medications and vitamins to first aid items and personal care products. Best of all, if you have Medicare and Medicaid, you may qualify for multiple opportunities throughout the year to enroll. So if you want more from Medicare, call the number on your screen now to speak with a licensed Humana sales agent. Learn about Humana plans that could give you more health care benefits, including coverage for prescription drugs, dental care, eye exams and glasses, hearing aids, and more. A licensed Humana sales agent will walk you through your options, answer any questions you have, and, if you're eligible, help you enroll over the phone. Call today and we'll also send this free guide. Humana, a more human way to healthcare.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.
Welcome back to the Exchange, everybody. We're looking at a Dow up near the highs of the session, up 139 versus the 166 session high. 0.5% gains after yesterday's declines. Take a look at the sectors, though. Only two are in the red right now. Consumer staples down 1/3%. But leading the way is energy, up nearly 7% right now. Just had some big news out of Saudi Arabia and OPEC. Saudi saying it's going to be cutting about 1 million barrels a day of production. We spoke to Brian Sullivan about that. The whole sector, the stocks are flying. Crude is up sharply as well. Let's take a look at some of the individual movers. We've got shares of First Solar lower on a double downgrade to sell from buy at Goldman today. They're citing concerns that earnings and profit margins are peaking and more cyclical headwinds to the business are ahead. FSLR is down about 8%. It is up 85% in the past 6 months. And shares of Alibaba are higher. Our sources telling David Faber that founder Jack Ma is lying low but not missing. There's been a lot of speculation about his whereabouts after a speech he gave criticizing China's regulators in late October. Alibaba is up about 5% right now. And shares of Pulte Group are lower on a downgrade to underperform at Bank of America on valuation and increased affordability concerns. Hearing a lot more about that lately. Pulte down 2.5%. Let's get over to Sue Herrera now for a CNBC COVID update. Hi, Sue.
Hello, Kelly. Good to see you. Here's what's happening at this hour, everyone. A new study from Pfizer says just under 47 million Americans have gotten COVID-19. That's more than twice the number of confirmed cases, but still far short of what is needed for herd immunity. Israel will begin its third national lockdown to slow the spread of the pandemic. This despite a very aggressive vaccination program that has already vaccinated more than 1/10 of their population. In Scotland, First Minister Nicola Sturgeon says the pandemic is now more serious than at any time since the spring. She is urging Scots to abide by the national lockdown and stay home. She also told President Trump not to come to Scotland to play golf during Joe Biden's inauguration. She was responding to reports that the Glasgow airport had been told to expect the arrival of a U.S. military plane previously used by the president.
We are not allowing people to come into Scotland for without an essential purpose right now, and that would apply to him just as it applies to anybody else. And coming to play golf is not what I would consider to be an essential purpose.
You are up to date, Kelly. I'll send it back to you.
Sue, thank you very much. Our Sue Herrera. Coming up, the NYSE reversing course and allowing 3 Chinese companies to continue trading despite the U.S. government's request. Some are calling the move bizarre. We're going to dig into it as all the China stocks are high flyers today as a result. Plus, it's a bird, it's a plane. No, it's Amazon. We'll talk about what's going on there and the battle of the bike versus the mirror. It's on Rapid Fire in just a moment.
I made a business out of my passion. I mean, who doesn't love obsessing over network security?
All our techs are pros. They know exactly which parking lots have the strongest signal.
I just don't have the bandwidth for more business. Seriously, I don't have the bandwidth.
Glitchy video calls with regional offices? Yeah, that's my thing.
With AT&T Business, you do the things you love. Our people and network will help do the things you don't. Let's take care of business. AT&T.
Of all the companies on the Fortune 500 in the year 2000, more than half no longer exist. Digital transformation isn't just a good idea, it's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3.ai. This is Enterprise AI.
Look, if you're spending countless hours with spreadsheets trying to organize your finances, you're missing out. Stop wasting time
and let Truebill do the work for you. It's the easiest way to save time and money.
Download today and take control of your finances.
Having trouble getting help for erectile dysfunction? Get help fast with Lemonade Health.
Just answer a few questions. And they can send you medication so you can get better quickly. Visit lemonadehealth.com today.
On Squawk Box, Jason Trennert on the Georgia Senate runoff. What it could signify for the markets and the economy. Will the balance of power shift in the new year? Squawk Box, 6 a.m. Eastern. And watch Squawk Box anytime on demand.
Welcome back, everybody. Let's catch you up on a few stories that should also be on your radar today. It is time for Rapid Fire. Here to break down the headlines are Deirdre Bosa, Bob Bassani, and Julia Borston. Welcome, everybody. First up is sticking with Peloton. Stifel says the future is promising for Peloton even after gyms open back up. They're saying they expect robust post-pandemic growth for what they're calling the world's first global fitness platform. They also like the Precor acquisition. The stock is shaking off yesterday's weakness. It's still up fivefold in the past year. They give it a 160 price target. Deirdre, it's at 147 today.
Yeah, and Kelly, this is all about sort of introducing this new way of working out, this digital acceleration that is led to the rise of these connected fitness apps. Kelly, I just even tried the yoga part of the Peloton and was pretty pleased with it. So there's like a lot to discover. And one of the most interesting stats from its rise is how often people are using the app because it sort of breaks it up into bite-sized pieces. So it's not surprising that the brokerage says that there's room to run, but I am actually a little bit more interested in one that it's adding, a buy rating to Vroom. And this is the digital used car dealership that uses AI to improve its efficiency, just an acquisition to further go down that road. So this is all about the themes that we've been talking about, Kelly, for the last year, indeed, which is that digital acceleration, which Peloton and Vroom are certainly a part of.
Yeah, used cars are hot. We know that, Bob.
Oh dear, where do I start here? So they say they're expecting robust pandemic growth for the world's first global fitness platform. So where were we? We were $20 on this stock in March. What are we now, Kelly, 145? 5-6 times? You think they figured that out? Maybe? And maybe people are going to stay home forever, but maybe some people like me are going to go back to their gyms in 2021. I'm looking forward to that. Maybe not use your Pelotons as much. Maybe they'll be profitable someday. They're not right now, but next year they're supposed to be maybe 50 cents or so. So what are they, 145 divided by 50? Gee, 270 times forward earnings. But don't worry, the revenues are expected to grow. Am I being curmudgeonly about this?
It's a bargain. No, but and Bob, I think
Bob.
it's not even so much about do people keep using the Peloton, but do they keep adding new customers at the same rate that they're adding them this year, Julia?
Well, I think one really interesting place to look for that, Kelly, is the deal with Precor. This Precor deal not only enables them to ramp up their production and also start making different types of products, but also Precor has relationships with fitness clubs, hotels, universities, and other commercial partners. And this could be a great way for Peloton to expand there as well. I would say, just to add to Bob's curmudgeonliness, there's also the question of what kind of role Apple's fitness app will play into this. I'm with Deirdre and that I love the Peloton fitness offerings. I've done the yoga, I've done the cardio, but the question is, will Apple's Fitness Plus be a real rival to that?
I'm enjoying my free prenatal yoga videos on YouTube, by the way. There's a wealth of offerings there, too. All right, let's move along. Let's talk about this major move out of the New York Stock Exchange today. It's a big about face. They're no longer going to delist 3 Chinese telecom giants. This reverses a decision that was made just last week. The original move was in compliance with an executive order signed by the president barring American companies and individuals from investing in firms allegedly aiding the Chinese military. Well, the NYSE now announcing it's dropping these plans after further consultation with relevant regulatory authorities. You can see the telecom companies up 8 to 12% on the news. Shares of other companies like JD, Bob, are also flying.
Well, is this an embarrassment to the New York Stock Exchange or what? Now, I have to give them a little slack here because what actually happened here? There was an order by the president and the Treasury Department is issuing regulations. So obviously, what seems to have happened here is they have decided now that these three companies actually don't fall under the regulations anymore. Okay. That's fair, but why did they figure that out before they decided to delist them? That's the embarrassment. And the obvious answer is the regulations are so vague, so hard to figure out, so difficult to interpret that not even the lawyers at the New York Stock Exchange working with the Treasury could figure that out. This is a bit of a black eye for the NYC, but it's also a sign that it's very difficult to actually set up regulations that are clear and that everybody understands what the rules are.
Yeah, and
also,
Kelly,
Deirdre,
can I be a curmudgeon this time around also?
Yeah, the ownership. Yeah, the ownership angle, I was just going to say on this, I think is part of the issue. So if you say, okay, you can't own or invest in companies that are, what is the wording? Tied to the Chinese military, involved with the Chinese military, and we all can probably also guess what's going on here. Pressure from China. I mean, let's not forget that they were already talking about ways of retaliating to that move, Deirdre. What were you going to say?
Yeah, I was gonna pick up on Bob's curmudgeon thread, and your point is exactly right, Kelly. Right? I mean, China says that Huawei doesn't have any real ties to the government; it's owned by employees. Does anyone really believe that? The answer is no. But I got one number for you: $144 billion. That is how much Chinese companies have raised in the U.S. stock market over the last 2 decades. You think that the NYSE and NASDAQ are really going to, cut off their nose to spite their face there? This is all about dollars. The combined market value of China-based companies with at least a portion of their shares traded in the U.S. right now, that's about $2 trillion. And I think that's what it comes down to, money here.
Absolutely, and you have to wonder where it's going from here. A black eye, like you said, Bob, but also I think a sign of just how deep some of these conflicts run that we're increasingly going to have to face. And maybe they're just betting it'll be less acute under a Biden administration. Right. All right, let's turn and talk some Amazon now, talk about what they might be up to.
Kelly,
go ahead.
S&P today announced that they were not going to remove these three stocks from their global indexes because the New York Stock Exchange didn't do it. So you see these knock-on effects. This is the politics of indexing. You have all of these effects on these global indexes around the world. Today, S&P decides, well, we can't do that because the NYSE isn't doing it. So there's really serious consequences to all of these discussions. This is not academic discussions we're having.
No, not at all. It's all about the money, like Deirdre was just saying. All right, as I mentioned, Amazon up to some new business. It's their first ever purchase of aircraft today. They're buying 11 planes from Delta Airlines and WestJet. These are, I think, Boeing 767s. The expansion of the Prime Air fleet comes at a time when we're all demanding faster, cheaper delivery for all the goods being ordered online. Amazon investing big time to keep its delivery edge, putting some pressure on shares of FedEx and UPS today. What do you make of it, Julia?
Well, I think this just speaks to the fact that Amazon understands that its advantage is its scale and its speed. And now it's going to be able to continue to grow and continue to hold on to the growth that it's seen through the pandemic if it can make those delivery times shorter. This is just another way to make sure that it's controlling the process. It's not reliant on other carriers that might also be delivering packages from other companies, and to make sure that it can really shorten that delivery time as much as possible. Kelly, I think we've all gotten spoiled during the pandemic thanks to these short delivery times from Amazon. And I think even as people go back about their lives, maybe Bob's going to be going back to the gym, but I don't think he's going to be buying less stuff from Amazon.
Bob?
That's absolutely right. And what you said is absolutely correct. Sometimes we spend a lot of time trying to dig beneath the surface, what's really going on. But you said it right, Julia. Amazon wants to be faster and more efficient, and buying their own aircraft is the natural way to do that. This story actually is what it seems. It makes perfect sense.
And to me, it's widening that gap with we won't talk about what the USPS experience has been like this year. Deirdre, go ahead. We'll give you the last word.
I was going to say, I think it all comes down to one word, and that is control. The statement from Amazon was so telling. Having a mix of leased and own aircraft allows us to better manage our operations. Comes down to that control, that integration from top to bottom that makes Amazon so efficient and that flywheel so powerful.
Yeah, and I'm sure Boeing doesn't mind either that they're getting into the game in a bigger and bigger way. Thank you all very much. We appreciate it today. Deirdre Bosa, Bob Pisani, and Julia Borston for Rapid Fire. Still ahead, always fall back on winning long-term themes. That's how Jim Cramer says to approach any market sell-offs. One of his key themes for 2021 is cybersecurity. We've got his picks in the space next. And don't forget, you can watch us live on the go using the CNBC app anytime. We're back in a couple.
And now a mini meditation. Inhale serenity. Exhale whatever's happening here. Now bring your focus back to your customer, Tom. Salesforce Customer 360 helps you focus with a single view of your customer. Like Tom.
Who's Tom?
Medical school was very stressful. I lost a lot of hair during that time. Nutrafol is 100% drug-free and it's natural. You can't argue with clinical proof. Start your hair growth journey at Nutrafol.com.
If you're thinking about going to school online, Southern New Hampshire University is where you belong. We've been online for more than 25 years and have helped thousands of students reach their goals. As a nonprofit university, we believe access to high-quality education should be available to everyone. That's why we offer some of the lowest tuition rates in the nation and haven't raised tuition in nearly a decade. So no matter where you want to go, SNHU can help you get there. Visit snhu.edu today.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.
Welcome back. Take a look at the cybersecurity ETF hack. It's up more than 80% from the March lows, and amid a shift to remote work during the pandemic, Jim Cramer just made the industry one of his top 10 investment themes for this year. For a closer look at some of the stocks to watch from that list, I'm joined by Frank Holland. Hi, Frank.
Hey there, Kelly. You know, cybersecurity stocks, some of the top in tech over the last month. As you mentioned, Cramer giving his top picks in the sector. CrowdStrike and Palo Alto Networks especially outperforming the broader market, even the red-hot NASDAQ. Those are part of his picks. It also includes Okta, Zscaler. Those are also outperformers. Cramer particularly citing NortonLifeLock as a stock with a strong dividend, over 2%. Also said it might be a target for M&A. The tech-heavy index, however, is only up about 2% over the last month, so compared to those cybersecurity stocks. But cybersecurity's rise, not really a surprise due to recent corporate headlines. Microsoft disclosing a massive security breach with hackers accessing the company's source code in that SolarWinds hack last month, which included a breach of cybersecurity company FireEye. And in September, hospital operator UHS was hit with a ransomware attack. And throughout 2020, vaccine companies, they were just targeted by foreign hackers. Cramer adding, with so much data up there in the cloud, those cybersecurity stocks are the ones to watch and invest in for 2021. Kelly, back over to you.
All right, Frank, thank you very much. Frank Holland. And for all of Jim's top investment themes for 2021, head on over to CNBC.com. Still ahead, Bitcoin is trying to stage a rebound after yesterday's declines. But the question on everyone's mind is whether its price these days is sustainable. Coming up, CoinDesk's Michael Casey on why the run-up has been very different this time versus 3 years ago. We'll dig into it. We'll tell you why. We're back in a moment.
See yourself.
Welcome back to the mirror.
And know you're not alone. Because this,
Come on, Jesse, one more.
is a reflection of an unstoppable community. In the mirror.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.
What do I do when my love is away?
There's a world for you to be alone. How do I feel at the end of the day? Are you sad cause you're on your own? I can't find a little help from my friends. Oh, I'm gonna try a little help from my friends.
You know what's making Sarah's migraine worse?
Okay, let's table that.
But you know what gives her some relief? Using ZocDoc to book a video visit.
You'll get the prescription this afternoon. Does that work?
Yes!
Oh.
ZocDoc makes healthcare easy.
Who is USAA made for? It's made for him, a veteran who honorably served. And it's made for her. She's serving now. We also made USAA for military spouses and their kids. Become a member. Get an insurance quote today.
Get an edge. Invest like a pro. Access CNBC's live streams around the globe. Unparalleled access to CNBC experts. Actionable investor insight and ideas. Start your free trial today at cnbc.com/pro.
I attribute my hair thinning to excess stress levels. Nutrafol improves hair growth by targeting stress as a root cause. I have better resistance to stress. It's so rewarding. Learn more at Nutrafol.com.
No more waiting. This year is gonna be different. My New Year's resolution, get happy.
Now you can skip the grocery store and stay healthy at home. Sunbasket delivers totally delicious meals ready in minutes. Fresh and ready meals done in minutes. New from Sunbasket.
The Ridge wallet does a lot more than a typical wallet. It's small and modern and expands to hold cards and cash. It's made from military-grade material. It comes in 12 colors with a cash strap or a money clip. It blocks RFID, has a lifetime warranty, and free shipping and returns. Get 10% off today at ridge.com/TV.
Welcome back. Bitcoin is having a volatile day, but it's hanging on to about a 6% gain after getting dragged down in yesterday's sell-off. We're at 33,380, so we're near all-time highs, and it was up more than 300% in 2020. Now, that was in part to some big players buying in, from Square and PayPal to investors like Bill Miller giving his backing. JP Morgan says it could see Bitcoin hitting $146,000 as it competes with gold as an alternative asset. And the boom is even leading to mergers in the space. CoinDesk announcing it's acquiring crypto data services and startup TradeBlock. On that note, let's bring in Michael Casey. He's the Chief Content Officer of CoinDesk. Michael, we should know, and it's great to see you again. We worked, together at the Journal back in the day, but even the migration of journalists, the professionalization of the crypto industry, right? It's remarkable.
Yeah, absolutely. You are starting to see this, professional, institutional body of interest in this. It's quite a change, right? I mean, we saw largely a retail play in this space. Certainly the last time we had a boom in 2017, it was kind of mom and pop. Now it really does feel quite different. It feels like we've got institutions, and that's exactly what CoinDesk is positioning itself for. This purchase of an index provider, TradeBlock, the leading index and data provider in the space, because those institutions are going to need reliable data, reliable pricing, and we think we, as this deeply established news organization, are well placed to do it.
Yeah, and I want to go over, and because you guys now are going to kind of be this repository for all of this data, we're able to start combing through it a little bit and figure out some lessons and takeaways from what's going on with Bitcoin this year. And Michael, most striking to me is the fact that if you just even look at Google Trends and search volume, it's nowhere near today what it was in 2017. And some of your findings echo this, that a lot of the participation is from the whales, really, that the retail side of it hasn't been the driving force lately.
Yeah, we're obviously seeing, as the price rises, a lot of broad-based interest in the mainstream. But again, in 2017, this was largely a retail-led phenomenon. And of course, it wasn't just Bitcoin. Everybody was piling into ICOs and Ether and everything. And so it was this kind of real mania-like broad-based experience. And what we actually saw at that time is the so-called whales, and they're measured in the Bitcoin space by those addresses. And on the Bitcoin blockchain, there were addresses that have more than 1,000 Bitcoin in them. And in fact, the numbers of those large addresses were falling at the time of the last bubble in 2017. This time, those numbers are now at record highs. At the same time, as you point out, Google Trends are not showing quite the same level of engagement amongst the broad populace. So very much a story around big numbers, big players coming in, and that's what's driving the price, rather than this sort of broad-based kind of mania, if you like.
Yeah, and in fact, you guys have said that the number of active Bitcoin addresses is down from its highs, about 1.1 million or so, but it was about 1.3 back in 2017. What does all of this tell you about the nature of the run-up this time, its sustainability, and the ownership that's been changing hands?
Yeah, I mean, it certainly speaks a lot to that same story of the changing hands, right? Because if you have a broader base of users, there's going to be a broader base of addresses. I think there are a lot of people who got in back in 2017 who just said, I'm not touching that thing again, right? Because they lost a lot of money as we came off those highs in 2018. And so now they're out and these other guys are coming in. The numbers of active addresses are rising as well, but not to those highs. I think the question of sustainability is a really interesting one, though, right? I mean, one would think that as big money comes in, there's asset allocations, there's companies like Mass Mutual that are putting funds in, right? Well, that seems to be a long-term play, and that's a very legitimate view of this. But of course, Bitcoin is always volatile. We came off 17% just in a day yesterday, and now we're almost back up at those all-time highs again.
Right.
This is the story of this space. And I do think that there will be traders who take advantage of this. They've got, CME Bitcoin futures as a place for them to speculate, and all of that gives the opportunity to take profit, to short it. And so, volatility is not going away. Sustainability, though, I mean, we've gone up and down, so many times now. I think the fact that we're back up again really does give some real evidence to the idea that this is a thing, right? This is a thing. This is not just some flash in the pan crazy idea.
Absolutely. No, it's the professionalization. And again, that's why I'm struck by the number of, again, even journalists who are now covering this space. We wanted to ask you real quickly about the regulation that's coming down. I mean, if you have financial authorities saying that wallets need to track and anyone who's dealing in Bitcoin needs to have a name and address of transactions between two parties, it kind of undermines the point of Bitcoin. Jack Dorsey protested about this yesterday. Square obviously has some skin in this game, but it could be necessary to comply with anti-money laundering laws. So it seems inevitable that we're going to need some track record, right? Is that going to hurt Bitcoin's adoption prospects?
It's a really important question, Kelly, and it's a very big issue. In some respects, what it may speak to as well is more of this bifurcation, which I don't, many of us don't think such a great thing, right? This is supposed to be a technology that gives broad-based access, that's financially inclusive. The thing about privacy is not about, necessarily whether crooks can run away with it. It's about freedom, right? It's about the idea of money being this important tool that people have to express themselves as much as anything else. And there are many people around the world for whom this is an important tool. So is this going to be something that institutions who comply with regulations get to dominate and keep the little guys out? Or are we going to create new tools that allow the broad base of population to participate as Wall Street is currently doing?
And maybe that's where Square can actually come in and play a role in that as well. Michael, again, very good to see you. Thanks for joining us today. Best of luck. Michael Casey is with CoinDesk. That does it for the exchange today, but don't go anywhere. Up next on Power Lunch, the pandemic crushing auto sales in 2020. We're going to talk to Group 1 Auto CEO Earl Hesterberg about whether cars will make a U-turn for 2021. I'll see you on the other side of this break with Tyler Matheson.
This is the investing book everyone is talking about. It's called Follow the Smart Money. And traders are lining up here to meet the authors, John and Pete Najarian, and get a free copy.
The smart money on Wall Street belongs to the big boys. They're the ones with the resources and technology to know before any of us when a stock is going to move. By following their trades the way we do, you gain their advantage and get in first, ahead of the herd on the smartest trades.
You see John and Pete Najarian on TV. Whether you trade stocks or options, this is how they pick their trades. And you don't have to be here to get your free copy. Call or go to followthesmartmoney.com right now. Just take care of delivery and it's yours free. Act quickly and you'll also get this companion DVD for free.
Call 800-850-3232 or go to followthesmartmoney.com now. That's 800-850-3232 or followthesmartmoney.com. That's followthesmartmoney.com.
Online dating? I know people meet that way, but where would I even begin?
Open laptop, go to OurTime.com, look for free. It's easy to take a look on Our Time, the fastest growing dating site for people over 50.
We did it!
Wherever you start, SNHU is where you can finish.
Here we go. And it's it. Southern New Hampshire University.
That gets a hug.
Look at that! Master's degree! I did it! I did this for my children. I am very proud of myself.
Finish your degree at snhu.edu.
Enterprise Artificial Intelligence has the power to transform the most complex organizations and the world, delivering medical supplies where they're needed, keeping our armed forces at the ready. Cleaner, safer energy, all thanks to 1 billion predictions per day. C3.ai is AI at a global scale, harnessing the power of data to build a better future. C3.ai. This is Enterprise AI.
Oh my goodness, what's the procedure? What do we do, people?
The phones are dead.
Oh, how did that happen? Everybody stay calm. What's the procedure, everyone? What's the procedure? Stay calm!
The Office. Every episode, extras, exclusives. Streaming now. Only on Peacock.
Good afternoon, everybody, and welcome to Power Lunch. I'm Tyler Matheson, along with Kelly Evans. Stocks are higher, rebounding from yesterday's big sell-off, but the risks to the market do remain. From record high stock prices to the slow vaccine rollout to the 2 key Senate seats that are up for grabs down in Georgia today. We will dig in what could derail the rally that has been so powerful lately. Plus, speaking of high-flying stocks, Netflix is up 60% in the past year, but one top analyst says as the streaming wars heat up, 3 key things are driving subscribers away from Netflix, and that analyst will join us. And later, auto sales for 2020, they're expected to come in at the lowest level since 2012. Despite a sharp second-half rebound, we will talk to the CEO of Group 1 Automotive about the road ahead. Power Lunch starts right now.
Thank you, Tyler, and hi, everybody. Stocks with a small rebound today after yesterday's big declines, but it seems the risks are mostly piling up to the downside. Let's go to Bob Pisani for more. Hi, Bob.
Hello, Kelly. And this is what is so frustrating for investors in this market. No follow-through at all. We had a modest sell-off yesterday. Everything's down 1.5% yesterday. We twisted ourselves into pretzels trying to explain what was going on, and now it's like nothing happened yesterday. In fact, this is like the reopening story again here. Energy big. Of course, you heard about what's going on with the Saudi production cuts. Oil's over $50, so that's a separate story. But industrials, banks, real estate, this is the reopening story is back. And look, defensive names like consumer staples down. It looks like early December again, essentially. No follow through. So even the Bostic comments, which I thought were significant yesterday, that the Fed could start tapering their bond purchases if the economy improved, market shrugged at that as well. Let me just point out these energy stocks here. These are what we call E&P names, exploration and production stocks, Occidental, Continental, Diamondback. That's a big Texas producers. Look at these double-digit gains. You don't see this very often in the energy space, folks. So it's a big day here with oil over $50 here. Kelly was talking about the market risks that they haven't gone away. The near-term one you all know about. There's some concern that the Democrats could capture control of the Senate or at least have a 50-50, have effective control. We'll know the answer to that in a day or two. But the slow vaccine rollout is certainly an issue, and there's concerns that could impact the economic recovery and also impact earnings, because we're expecting one big lollapalooza of an earnings rollout beginning in the second quarter. I'll show you that in a minute. Then there's some vague concerns about inflation in the second half. Just take a look at earnings. Now, remember, earnings season for the fourth quarter starts next Friday when the big banks report. But you see, these are the quarterly number estimates for the S&P here. $36 for the fourth quarter, $38 for the first quarter, $40 for the second, $44. You see this? It just keeps rolling out. But it's essentially the second quarter when they're talking about big moves up in earnings. And the problem here, of course, it's a race for the vaccine against the virus. And, of course, all of that is going to impact the reopening story and, Tyler, the earnings story. Back to you.
Robert, thank you very much. And Bob has just laid out some of the risks to the market and this sluggish start, at least yesterday, for 2021. Year-end targets, though, for the S&P 500 from most of the brokerages and banks are higher across the board, including at BMO Capital. It has a year-end target price of about 4,200 on the S&P. That's about a 15% return, and they're even lower than J.P. Morgan. My next guest does expect stocks to rocket, especially in the first half of 2021. He's Brian Belsky, Chief Investment Strategist at BMO Capital Markets. BB, welcome. Good to have you with us.
Tyler, great to see you. Happy New Year. Here's to a great 2021.
Yeah,
let's hope.
May we all have it and be healthy and safe as well. Why are you as bullish as you are, given how far stocks have come and given the fact that the economy has some sort of uncertainties in it?
Great question. We issued our report and our year-ahead piece on 2021 on November 19th, and I think we were at least either the first or the second of the top 10 banks in North America to put our piece out. So, we've been there for a while. We still think we're in a big 20-year bull market. March 23rd of 2020 was the reset, Tyler, that reset the next 10 years. I think the next 10 years of markets are going to be much different than the last 10 years, much more fundamental, much more bottoms up. I think where the biggest differences we have relative to other people on the street is, number one, consensus believes that the second half's going to be better. We actually think the first half's going to be better. If you think about all the people that you've had on your broadcast, even today and yesterday, you're talking about earnings increasing and inflation potentially in the second half, right when fundamentally the market is actually starting to look better. We think investors are going to start to get nervous because of a potential tone change from the Fed. I mean, let's face it, this has been a stimulus-driven market, and we think that we're going to see a lot of stimulus once Mr. Biden takes control, and with the help of Ms. Yellen. We think the stimulus package is going to be very big, bigger than everybody thinks, and that's going to fuel stocks higher, Tyler.
I'm sort of with you on the idea that if the market is moving higher, that it may move higher more in the first half as stocks discount a better economic performance in the back half of the years, where the profits are going to be going up, as Bob just showed. So you might expect stocks to do a little better then. I want to drill on the idea that I think is implicit in what you say. You have to be a more fundamental investor now in the market of the next 10 years than a macro investor in the market of the past 10 years. So I take that to mean that you can't just buy a sector, broadly speaking, that you can't just buy the market, broadly speaking, and that you'd better be ready to do some stock picking. Am I understanding you correctly?
You're absolutely spot on. And in our recommendations with respect to size and style, it bear fruit so far certainly from November 19th to the beginning of the year. We're basically equal weight growth and value, small, mid, and large. Now, even though small cap stocks did very good in December, the growth and value trade has been actually essentially flat. And I think too much has been driven into, are you a growth investor or a value investor? I think the days of learning about company management, cash flow, products, services are going to mean a lot more to investors versus formulaic quantitative investing. A lot have been said on your network today about some certain hedge funds posting a 20% return in 2020. I think that's because they become much more fundamental. I know our conversations with institutional investors have turned much more fundamental relative to the quantitative and macro theories that actually have dramatically underperformed the last 10 years. So again, I think we're going back to 80s and 90s investing, when I learned the market, and a lot of us learned the market, where we're buying companies, we're buying management teams, we're buying industries, and we're buying themes. I think thematic investing is going to be very important on the bottoms-up basis to pick good companies and hold good companies longer term.
What would be a key thematic issue for 2021?
Well, I think this whole notion of the return to normalcy, I think it's too easy. It's too easy, Tyler. And I think you have to, from a thematic basis, you have to be pretty diversified across all sectors. I think over the next 3 to 5 years, I know that technology and communication services are by far our favorite sectors, along with discretionary, I'm sorry. But this year, I think we're going to see a broadening out into some of the value areas. But I think you have to play themes within each one of the value areas. For instance, within financials, the #1 theme is scale. scale. You want to buy scalable assets. Within industrials, you want to be diversified with respect to the domestic side of things. I think you have to be really, really careful on just to lay that blanket of value overall. And I think the biggest call of all, quite frankly, is the stay-at-home stocks are going to do very good in any kind of potential nationwide lockdown, clearly. You want to maintain your positions in tech and communication services. And when the market goes up, peel back a little bit. And when the market goes down like yesterday, you buy back into those stay-at-home stocks. I think that's going to be
Do those stay-at-home
the best
stocks,
strategy.
are they predicated on a nationwide lockdown? Is that what you're expecting?
No, I mean, I think this. I think there's a very good chance that Mr. Biden's going to be aggressive. And I think there's a chance of a 30-day lockdown, and it'll be exacerbated with a very strong stimulus package to say, hey, listen, we want to get things right in terms of everybody being safe and well, and that would only make a bigger stimulus package likely. Now, does that mean that, that the Amazons and the Netflix of the world are going to go up? Yeah, probably. Those are names in secular growth that we want people to own for the next 3 to 5 years. I think they'll do very well under a lockdown, Tyler.
Interesting.
But as the market progresses through the year, you want to become more stock picking and more value and cyclical oriented.
Brian, before we let you go, I just want to clarify, you really think it's possible we could see a national lockdown here like we see in the UK now do?
I do, Kelly. Nice to hear your voice. How are you? I would say this, with Mr. Biden talking about a mask mandate, I think it's very likely, and it's only going to justify the type of stimulus that I think is going to surprise everybody, Kelly. And I think a big stimulus package will be justified by a potential nationwide lockdown.
I can't even imagine what that would do to the dollar and inflation expectations and all the rest of it. And I hope you're wrong, but at the same time, it's also so bad right now that I don't even know what the right strategy would be. It's just I haven't heard anyone go that far and say that's a possibility, Brian, so I appreciate it. Thank you. We'll see. Brian Belsky, we'll let you go, talking to us about these markets. Let's get to Meg Terrell now, bounce this one off her, but also talk about what's going on with the vaccination rollout. Any recovery is heavily dependent on getting people vaccinated as quickly and efficiently as possible, but the U.S. rollout has been off to a woeful start. Meg Terrell is looking around the world to see what's working elsewhere. Meg.
Hi, Kelly. Well, for now, an update just now out of the CDC on the vaccination pace, and it is slowing a little bit, at least from yesterday. The new numbers show that we have distributed now 17 million vaccine doses in the U.S. We've administered 4.8 million of them. Now, that's about 28.4%. Yesterday's update was 29.5%. So we're not going in the right direction yet. If you look nationally, Israel's still way far out ahead in terms of the percent of its population it's vaccinated, almost 16% now. United Arab Emirates, a new entry now, second place with more than 8%. Bahrain, UK, and the U.S. following. Those numbers from the UK and the U.S. a little bit out of date, but the U.S., with these numbers at 4.8 million, that's about 1.5% of the population. So what is Israel doing right, or what have they done right in the initial rollout? Well, they have got a strong community health system. A lot of this is very centralized. They've got a national vaccination registry that they established years ago, and it's all digitized, so everything goes into it, and they can track people really well. They're also doing simple things like repackaging the Pfizer vaccine, which comes in packages of 975 doses, into smaller shipments. We talked with Dr. Itamar Grotto from the Israeli Ministry of Health about what is working there. Here's what he said.
We have a very strong community health system, which is well organized. It's all public. There are 4 HMOs in Israel who are responsible for the entire population, and they are, according to the national health law, they have to supply services to every citizen.
And guys, it's not perfect. They are running into supply issues now in Israel, and also questions about covering everybody in the region, including Palestinians. But this, as Israel now has entered a new lockdown, just like the UK has, as they detect this new, more contagious variant, and they're racing the variant, really trying to get the vaccine out as they really lock down the economy. Guys?
It's so fascinating, Meg. I mean, so many people now are saying, why can't whatever we do with the flu shot, can we just do the same thing with that? I mean, there's a lot of questions, but I also want to come back to you on what we were just speaking with Brian Belsky about. I mean, it's a little early, a little speculative to ask the question, but if investors are asking it, I wonder, do you hear any chatter about the prospect of the U.S. doing a national lockdown of sorts, maybe in the next few weeks if our numbers look as bad as they're looking in some other countries?
Well, it'd be surprising if it happened in the next few weeks before a change in administration, because that has just been so against what we've been hearing from the current administration in terms of the approach here. And it is so politically untenable. You even, hear folks in the Biden camp really staying away from talking about overall shutdowns. But of course, there has been discussion of if you can provide the economic support for businesses where, there is the risk of spread for those businesses to shut down. Would we see something like that? Those kinds of things have been talked about, but it is not something that I'm hearing now, this is definitely going to happen as soon as there's a change in administration. However, you are seeing countries react that way when they detect this new variant, and we have detected this new variant in several states now.
Yeah. Interesting. All right, Meg, thank you so much. Our Meg Terrell with the very latest on the COVID front. Ty.
Fairly fascinating conversations here. I mean, Kelly, as you point out, we really haven't been hearing much about the idea of a nationwide lockdown. It is kind of antithetical to a lot of how the United States is organized, certainly in terms of public health and other things. But time will tell, and maybe Dr. Fauci's right that the hardest days are ahead. All righty, coming up on that cheery note, we are at the highs of the sessions. At least that's some good news. We've seen a nice ramp up in the last 15 minutes. Energy leading the way as crude oil breaks through $50 a barrel for the first time since February. We will have more on that exciting news. Plus, as Georgia heads to the voting booth for the Senate runoff elections, we will take a look at how Amazon's Twitch is becoming a can't-miss stop on the campaign trail. More Power Lunch coming up next.
Turn on my TV and boom, it's got all my favorite shows right there. I wish my trading platform worked like that.
Well, have you tried Thinkorswim? This is totally customizable, so you focus only on what you want.
Okay, it's got screeners and watch lists.
You can even see how your predictions might affect the value of the stocks you're interested in.
Now, this is what I'm talking about.
Yeah, it'll free up more time for your true crime shows.
British baking competitions.
Didn't peg you for a crumpet guy.
Focus on what matters to you with Thinkorswim.
I made a business out of my passion. I mean, who doesn't love obsessing over network security?
All our techs are pros. They know exactly which parking lots have the strongest signal.
I just don't have the bandwidth for more business. Seriously, I don't have the bandwidth.
Glitchy video calls with regional offices? Yeah, that's my thing.
With AT&T Business, you do the things you love. Our people and network will help do the things you don't. Let's take care of business. AT&T.
So you're thinking of buying a new home this year? The surge is, well, not where it normally is.
It's the middle that's the new star. Much of it likely to do with the pandemic and the ability to work from anywhere now.
From testing to tracing and mapping the genome, what do we need to do as a nation to catch up?
We have to vaccinate 3/4 of the U.S. population by the end of the summer in order to stop virus transmission.
The facts, the truth. The news with Shepard Smith. Weeknight, 7 Eastern, CNBC.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Having trouble getting help for erectile dysfunction?
Get help fast with Lemonade Health. Just answer a few questions. And they can send you medication so you can get better quickly. Visit lemonadehealth.com today.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
Welcome back to Power Lunch. A pair of runoffs in Georgia will decide which party controls the U.S. Senate and ultimately how much money can be spent by the Biden administration. The issues at stake include pandemic relief, clean energy, taxes, and more, which is why money has been pouring in, making these among the most expensive Senate races ever run. Republican Senator David Perdue and Democratic challenger Jon Ossoff, well, they've combined to raise almost $240 million. On the Republican side, Senator Kelly Loeffler and Democratic challenger Raphael Warnock, well, they're bringing in nearly as much. Stephanie Miller joins us now to break down the critical policy implications for investors masters of this vote. Stephanie, what's the primary one in your mind? Welcome.
Hi, thanks. I mean, so if Democrats win and they have the majority of the Senate, it will only be with the same number of seats that Republicans have. It'll be a 50-50 split, and Vice President Harris will serve as the tiebreaker. So, you know, I don't see a Democratic win or even a Republican win as being, you know, some sort of mandate for sweeping policy one way or another. But I do think that there could be some fiscal policies taken, especially if the Democrats do have technically the majority control of the Senate, that will be different than if Republicans were to maintain majority control. So the first thing that I think could happen as part of a COVID stimulus would be those $2,000 checks potentially. You know, something similar to what we've seen Democrats pushing in 2020 could carry over to 2021. I think infrastructure is something Biden really, really wants. And if he can get a bill to the floor, elements of that are green, that have clean energy involved, could absolutely move under a Democratic majority. And finally, to pay for some of this, because this will need to be moderated by getting Republicans to vote with Democrats, because the majorities will be so small. I think you could see some interesting things to corporate tax rates to raise them a point or two to help pay for some of this. So I think it will be a watered down kind of big stimulus fiscal policy package that we could start seeing take shape.
What is likely on the taxation side of it? You know, a lot of people are saying could have corporate taxes go back up, either to pay for a number of different policies just to close the deficit in general, or simply on the principle of repealing what President Trump did. So, you know, I've seen different notes where people are trying to figure out what that means for earnings estimates and projections. But is that the kind of thing you think would be first or second order of business, or further down the line?
I think it might be slightly further down the line, but I think it's a 2021 event, because I think despite that it is not easy to raise the corporate tax rate, if folks remember, it was at 35% until the 2017 Tax Cut and Jobs Act, when it went down to 21%. So to raise it up a few percentage points could be the easiest place to find money to pay for other priorities. And Biden will be really pushing a fairness and equality promoting suite of policies. So if he can justify, you know, this is to give to low and middle income individuals, let's make corporates pay a little bit more, I think that's not that unpopular of a message. I don't think it'll be that hard to move.
Steph, it's Tyler. I have two quick questions, which for the first time in my life, I'm not going to ask together. I'm going to ask them separately. Whether the Senate is 50-50, 51-49, or 52-48, doesn't that mean that over the next couple of years, that individual senators are going to have incredible pivotal power on anything that moves through? They can, one person, two people can block anything.
Yeah. So I think if Republicans maintain with either 51 or 52 seats, that one person will be Mitch McConnell, because he will be the one negotiating with Biden, and he won't let anything come to the floor unless he feels like his caucus can get something out of it.
But it gives huge power to the likes of Rand Paul or Susan Collins or others, right?
Right. Well, absolutely. Although the full caucus, the full Republican caucus, won't be needed. And conversely, if Democrats win, very few things are going to move with the full Democratic caucus, because, again, it's a very, very diverse field. Like, you think Bernie Sanders is the opposite of Rand Paul. And so I do think it will put a lot more power with those moderates, with someone like Susan Collins. I can see her being a true deal maker if Democrats
So
have
let me get to question two, and that is this. Tonight, there are two Senate races in Georgia. Tomorrow, there is the vote to basically count and certify the presidential election results from, among other states, Georgia. Will Senator Loeffler or Senator Perdue, who were part of the old Congress, be in the chamber tomorrow when Georgia's vote tally comes up? Loeffler, I guess, might be, because she's filling out Johnny Isaacsen's seat.
Exactly. So Loeffler, because it was a special election, she's technically still
a senator. But Perdue is not.
Purdue's not, so that seat's vacant. But Loeffler has said she will support the president's objections in states that are deemed to be unsatisfactory.
All right. Stephanie, thanks. Good to see you. Happy New Year.
Thanks.
All right, as the stakes in these two incredibly contentious races are so high, candidates have been doing whatever they can to reach potential voters, and that is including streaming while playing games on Twitch. Josh Lipton joins us now with more. Hi, Josh.
So, Tyler, Twitch is the video streaming site owned by Amazon. It's where people go to watch other people play video games, but it's also becoming a way for politicians to connect with young voters. And that's just what U.S. Senate candidate Raphael Warnock did, hosting game nights on Twitch along with candidate Jon Ossoff. They played the game Uno while also fielding political questions from players. It's part of this growing trend we're seeing. Remember back in October, Representative Alexandria Ocasio-Cortez played the game Among Us on the site, her stream peaking at 439,000 viewers. Michael Pachter over at Wedbush says it makes sense for politicians to leverage Twitch. Why not? The audience is young, it's interactive, and we know there are a ton of eyeballs here. The number of people watching Twitch in the U.S. on a regular basis, meaning at least once per month, reaching nearly 42 million in 2020. That was a jump of 26%. Pachter estimates that Twitch is probably now generating around $800 million in annual ad revenue. Rivals include Facebook and YouTube, but Pachter says Twitch remains the dominant force. So will these Twitch eyeballs, though, translate into actual registration and votes? Maybe we'll have a better idea after today in Georgia. Back to you all.
Wouldn't you just love to watch Mitch McConnell play Fortnite?
I would, you know, that's good entertainment, Tyler.
I mean, that is worth every penny. That would make me twitch.
That, you've seen, listen, we mentioned Warnock and Ossoff and AOC. You also saw Stacey Abrams. You also saw President Trump. Remember that, Tyler. He also streamed some live events. So bipartisan here, different politicians on both sides of the aisle trying to capitalize on those young voters.
Mitch McConnell versus Schumer in a real fight to the death. Love it. Josh. Kelly, take it away.
I would watch that as well. Let's do it. I love it. Tyler, maybe you and I should be challenging each other. What a mess that would be. All right, coming up, 2020 auto sales are expected to come in at the lowest level in a decade, but General Motors is getting a boost from two key areas. We've got those details for you. Plus, check out this mystery chart. The stock up 60% in the past 3 months. Citi giving it a double upgrade today, saying it even has more room to run. We will reveal the name right after this.
Enterprise artificial intelligence has the power to transform the most complex organizations and the world, delivering medical supplies where they're needed, keeping our armed forces at the ready, cleaner, safer energy, all thanks to 1 billion predictions per day. C3.ai is AI at a global scale, harnessing the power of data to build a better future. C3.ai. This is Enterprise AI.
Shield-level annuities from Bright House Financial can help provide your portfolio with a level of protection from market volatility and opportunities for growth, so you can feel some protection even when the market is uncertain. Bright House Financial, build for what's ahead.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.
The future. It's impossible to see. And when it's finally here, it might not be what you'd expect. It might just be better. Introducing Luxury Electric. Introducing Lucid Air.
COVID-19 has pushed global healthcare to the brink. Can Japanese innovations provide answers? From using computer game CGI to better diagnose diseases.
As technology becomes more advanced, patients will be able to check the state of their internal organs using their smartphones.
To 3D printing of human organs.
finding the right match, we will be able to create personalized medicine for each patient.
And turning the power of the sun into a death ray against airborne viruses.
As we distributed the units, we could tell that it helped to alleviate people's uneasiness over COVID-19.
I feel that this unprecedented technology will open up a brand new world.
Advancing healthcare in a pandemic world. Japan, powering tomorrow.
Battling COVID, doses of hope. The IPO alternative moving investors.
The public finally getting into some of the smaller companies that are out there.
New Year optimism on the path forward. Stay connected, stay informed. Watch or listen live on the CNBC app.
Welcome back to Power Lunch, everybody. Let's give you a quick check on the markets. The Dow is near session highs, up about 255 points or thereabouts. Micron hitting highs not seen since 2000 today. Have to get this, a double upgrade from Citi. Analysts expecting a big upturn in demand for memory chips this year. Let's bring in your Trading Nation team, because you can never trade enough. Mark Tepper, Strategic Wealth Partners. By phone, J.C. O'Hara of MKM Partners. Mark, take it away. Micron, buy, sell, or hold?
I'd be holding Micron. I mean, overall, look, Tyler, I love the semis. I mean, everything nowadays has a chip in it. Cars, phones, appliances. The golf balls I hit at Topgolf over the weekend. It's pretty amazing, by the way. You know exactly where your ball lands. So, not a huge Micron fan. There's always some supply and demand narrative that's overhanging that company. It's always out of whack. The goalposts are constantly moving. It's a very, very cyclical semi. And their product really, in my opinion, is the input to technology. It's not technology itself. So I'd rather own the technology. NVIDIA is the way to go. That's our largest chip exposure. And they're in all the fastest growing end markets that we find exciting. AI, autonomous vehicles, cloud, gaming. So I think they've got the best chips, NVIDIA. They're innovating, so that's where I'd be.
All right, JC, your opinion. Buy, sell, or hold on Micron?
Well, I like this upgrade or this double upgrade because technically this chart looks fantastic. And to me, Micron has plenty of room to run. And I say that because, well, let's look at the chart. There was a massive breakout last November, right? That breakout came from a 3-year base where Micron traded in a $30 range. Now, typically, what follows these breakouts after a long period of consolidation is a very powerful bull run, which I believe we are still on right now. So technically, we could see the stock push higher to 85 in the near term. And that gives you another 10% from current levels. But just, I would say, keep in mind, we do have earnings this week, and that could be a potential catalyst or a risk factor. So keep that in mind. But we love the technical setup here.
All right, gentlemen, thank you very much. Mark, JC, we appreciate it. For more Trading Nation, you can head to our website, or you can follow us on Twitter at Trading Nation, not to be confused with Bachelor Nation. Kelly.
Although sometimes they overlap.
Yeah.
Ahead on Power Lunch, 2020 auto sales hit their lowest level in nearly a decade. Will they make a U-turn this year? We'll ask Group 1 Automotive CEO Earl Hesterberg about that next. Plus, are you still watching? One firm says Netflix could face a wave of subscription cancellations in the next year. We'll have that when Power Lunch continues.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Wedge patterns often signal inflection points for stocks. A bullish wedge occurs within an uptrend and consists of two converging trend lines slanted downwards. Conversely, a bearish wedge occurs in a downtrend and consists of two converging lines going up. I'm Lee Bohl, and Schwab is the better place for traders.
Okay. Bounced a trade idea off my firm. Same old lines. I mean, show me some technical indicators, proprietary research, something.
That's why I like Schwab. They help look out for your blind spots.
Come on, Johnny, you got this, buddy.
Speaking of blind spots.
It's time to trade up. Schwab helps you see the full picture with powerful intel and trading specialists who get it. Plus, get commission-free online stock, ETF, and options trades. Schwab, the better place for traders.
Incomparable design makes it beautiful. State-of-the-art technology makes it brilliant. The visionary Lexus NX.
Lease the 2021 NX 300 for $359 a month for 36 months.
Experience amazing at your Lexus dealer.
It takes baby steps. Let's start by reducing hiring bias, training managers, and guaranteeing an equitable and inclusive workforce. Take your first step. Become a SURE member today to get the tools you need.
You need the right pieces in your portfolio to preserve capital, diversify to mitigate risk, provide liquidity, while delivering returns. Gold, your strategic advantage.
On Squawk Box, Jason Trennert on the Georgia Senate runoff. What it could signify for the markets and the economy. Will the balance of power shift in the new year? Squawk Box, 6 a.m. Eastern. And watch Squawk Box anytime on demand.
Now you can skip the grocery store and stay healthy at home. Sunbasket delivers totally delicious meals ready in minutes. Fresh and ready meals. New from Sunbasket. Use code TV35 to get $35 off plus 4 free gifts.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
I was having night terrors. I wasn't sleeping. I'd seen BetterHelp ads, and I was like, I should give it a shot. I was paired with a really good counselor. I feel hopeful for the first time in a long time.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. Germany has extended its nationwide lockdown through the end of the month. Chancellor Angela Merkel also introduced a series of stricter COVID measures, including additional testing and quarantine requirements for travelers coming from so-called risk areas. Meanwhile, here in the U.S., the Georgia Bureau of Investigation is probing specific threats made against today's Senate elections in 10 counties. According to a weekend post from the Cherokee County Sheriff's Office, employees from several counties' offices had received threatening emails. Kenosha, Wisconsin is bracing for possible protests ahead of a charging decision in the Jacob Blake case. Blake, a black man who was paralyzed after being shot in the back multiple times by Rustin Shesky, a white police officer. And Kyle Rittenhouse, the Illinois teen charged with shooting and killing 2 people and injuring a 3rd during the unrest in Kenosha following Jacob Blake's shooting, has now pled not guilty on all counts. You are up to date, Kel. I'll send it back to you.
Okay, Sue, thanks very much, Sue Herrera. The oil market closing up for the day, and it has been a shocking session after a surprise decision from Saudi Arabia to cut production. Eric Chemi has more of the details for us. Eric?
Kelly, that's right. The news out of OPEC is setting oil prices to their highest levels since before the pandemic. WTI in particular topping $50 a barrel for the first time since February, just 11 months ago. Earlier in the session, OPEC's decision to keep output steady in February is driven by voluntary cuts out of Saudi Arabia, which will offset slight production increases out of Russia and Kazakhstan. OPEC has already increased production by about 500,000 barrels this month. Traders are also watching tensions in the Middle East after Iran seized an oil tanker on Monday. The move in oil is giving a big boost to energy stocks as well, with that sector up more than 6%, led by gains in Occidental, Marathon, and Apache. The broader oil and gas ETF, ticker XOP, that's up more than 8% today. Kelly, over to you.
Thank you very much. There shouldn't be such a delay for a couple of floors. Let's check on markets about half past the hour. We see the markets picking up some steam this afternoon with the Dow gaining more than 250 points at the highs and 256 points right now. That's up nearly 1%. NASDAQ, S&P, and Dow all pretty consistent. The Russells up 2%, Ty.
All right, Kel, thank you very much. After a tumultuous but ultimately positive year for the stock markets, there's a lot to wonder about for the year ahead, and Jim Cramer is out with his investable themes for 2021. Let's run through them quickly here. COVID-19 stimulus, that's one. China and remote working, that among the themes here. He's also watching the potential recovery in travel and leisure. Among the stocks he likes most in that space, and here they are, Boeing, Uber, and Airbnb. All three are doing very nicely today. We talked a little bit about Airbnb versus Grubhub, I believe it was yesterday, and the consensus there with that expert was Airbnb, just like Jim. Boeing reaching a deal with Amazon today. Amazon's going to convert 7 retired Boeing passenger jets into cargo planes. But what's really driving Boeing stock lately, up more than 20% over the past 3 months, is the return to the sky in the last week or so of that 737 MAX, with more coming. But Boeing shares are still down 40% over the past 12 months. As for Uber, Kramer isn't the only one who's bullish here. Needham naming Uber as a top pick for the new year as well. And how about Airbnb today? Atlantic Equities weighing in, downgrading it to neutral from overweight, but William Blair initiating with an outperform. BTIG says the current quarter, its first as a public company, is tracking ahead of estimates. Now, you can get the full list of Mr. Kramer's investing themes with stock picks on CNBC.com. Kelly, there's a lot to process there.
And a lot depends on the rollout of the vaccine.
It sure does.
Travel stocks especially super sensitive. Ty, thanks.
Yep.
Shares of General Motors are higher by more than 2% today after reporting fourth quarter sales. Our Phil LeBeau joins us with a look at those numbers and where the strength in particular was. Phil?
Kelly, the strength is in pickup trucks. We'll talk about that in a bit, but the Q4 numbers, as you mentioned, out today, and they were stronger than expected. Edmunds.com was expecting an increase of just 2.4%. You'll see that General Motors saw an increase in sales of 4.8% in the fourth quarter. That's one reason why the stock was moving higher. Also, full-size pickup trucks, as I mentioned, that's really where the strength is coming. In a year when GM's overall sales were lower, GM's full-size pickup truck sales were up 4.6%. As I mentioned, full-year sales down 11.8%. The average transaction price, and this is really the key to this story here, $41,886. That's the average price somebody paid for a GM vehicle last quarter. That is a record high. One reason why people are optimistic about the Q4 financials they'll report in a few weeks. The December sales for Toyota, that's a slightly different story here. Now, they're seeing high transaction prices as well. December sales up 7.5%. Full-year sales down 11.3%. We should point out the Prius, and we're pointing this out because the Prius for years was a hot seller. It was really a halo vehicle, if you will, for Toyota. They had their lowest sales for any year since 2004, selling just under 50,000 Priuses last year. And finally, Nissan reporting sales a decline of 19.3%. We will get the sales rate, guys, the full year sales a little bit later on today. We expect it to be about 14.5, 14.6 million vehicles.
All right, Phil LeBeau, thank you very much. And let's take a deeper dive, as they say, into the auto industry and whether we can expect sales to pick up where they left off in the second half of last year, which was pretty good. We welcome back Earl Hesterberg. He's president and CEO of Group 1 Automotive, 185 total dealerships, not just in the United States, but around the globe as well. Earl, it's always good to have you. Welcome back and Happy New Year.
Well, thank you. Same to you.
How'd you do last year?
I adjusted staffing level at dealerships every week as we had shutdowns and business going up and down. But we got through it quite well.
Overall, how do sales in 2020 compare with 2019, and where were the soft spots?
Well, if you look at retail sales for the industry, they're going to be down about 1.5 million units from 2019, but 1.2 million of that 1.5 million unit decline came in April and May. So as we went through the summer and the fall, the volumes were getting back somewhat close to previous year, only 300,000 units down in the summer, fall, and beginning of the winter. So the business was incredibly resilient in the second half of the year, and it seems that there's still that momentum is going to go through to the first part of 2021.
Let me ask you, well, why don't I just ask you this, because it seems to flow right out of what you just said. Why do you think that is? Why do you think people came back so confidently in the second half of the year? I assume you're going to say pent-up demand, but could it also be that, well, gosh, I'm not traveling, I'm not going on a long trip, and so I'm going to treat myself the best way I know how, and that is to buy a new car or truck?
Well, there's quite a few different dynamics in there, but I do think people like their personal space. You know, Texas is a wide open space, and I see many of our employees and friends who normally would fly from Houston to Dallas or Oklahoma or Louisiana. Now they're making those trips in a car. And there's a lot of new product on the market that has a lot of interest from consumers. And interest rates are low, so affordability is still quite good on automobiles. So there's a lot of positive factors, including strong used car values. So trade-ins are worth as much as they've been in many years. So we have a lot of things going for us in auto retail that may not be evident immediately.
As you go or went region by region or market by market over what happened in 2020, which markets or regions came back the fastest or stayed strongest the longest, and which were sort of slow to respond to that second half comeback that you described?
Well, the South Central and Southeast U.S. had incredible resiliency. Their pickup truck markets, they didn't have the extreme lockdowns. Even now, we're struggling a little bit with California. It's locked down quite a bit. We don't have a lot of stores there, fortunately. New Mexico's been locked down. Parts of New England have been locked down pretty tight. But if you go across the Sun Belt and Southeast, the business has been fairly steady. The UK has been a bit challenging. We were closed about 3.5 months in the showrooms, but we continue to do quite a bit of business in the UK. And you know, we're going to come through fine in the UK also.
All right. Earl, it's nice to see you again. Happy New Year.
Thanks for having me.
Earl Hesterberg. Kelly.
Power movers are on deck. Chinese companies getting a reprieve, a big bank hitting a new high, and is the sun setting for a popular solar stock? It's all right after this. Don't go anywhere.
Some things are good to know, like where to find the cheapest gas in town and which supermarket gives you the most bang for your buck. Something else that's good to know? If you have Medicare and Medicaid, you may be able to get more health care benefits through a Humana Medicare Advantage plan. Call the number on your screen now and speak to a licensed Humana sales agent to see if you qualify. Learn about plans that could give you more health care benefits than you have today. Depending on the plan you choose, you could have your doctor, hospital, and prescription drug coverage in one convenient plan. From Humana, a company with nearly 60 years of experience in the healthcare industry. You'll have lots of doctors and specialists to choose from. And if you have Medicare and Medicaid, a Humana plan may give you other important benefits. Depending on where you live, they could include dental, vision, and hearing coverage. You may also get rides to plan-approved locations, home-delivered meals after an inpatient hospital stay, a monthly allowance for purchasing healthy food and beverages, plus an allowance for health and wellness items. Everything from over-the-counter medications and vitamins to first aid items and personal care products. Best of all, if you have Medicare and Medicaid, you may qualify for multiple opportunities throughout the year to enroll. So if you want more from Medicare, call the number on your screen now to speak with a licensed Humana sales agent. Learn about Humana plans that could give you more health care benefits, including coverage for prescription drugs, dental care, eye exams and glasses, hearing aids, and more. A licensed Humana sales agent will walk you through your options, answer any questions you have, and, if you're eligible, help you enroll over the phone. Call today and we'll also send this free guide. Humana, a more human way to healthcare.
You need the right pieces in your portfolio to preserve capital, diversify to mitigate risk, provide liquidity, while delivering returns. Gold, your strategic advantage.
I prefer HelloFresh over any other meal kit because the variety in these boxes and the quality of the food totally exceeds any other meal kit company I've ever tried. I love it.
Hit refresh with HelloFresh. Use code TV10 for 10 free meals, including free shipping.
This is obviously where the music gets made. I'm trying to figure out where the money gets made.
Marcus Lemonis explores the unique industries that define America's most iconic streets. Streets of Dreams with Marcus Lemonis. All new tonight, 10 Eastern. Set your DVR now. Cnbc.
All right, folks, power mowers are out of season, but we got power movers. We start with China Telecom, China Mobile, and China Unicom, all three companies getting a reprieve from the NYSE, which threatened to delist them, but reversed that decision after consulting regulatory authorities. First Solar is down big today after Goldman Sachs downgraded the stock to sell from buy, skipping over hold. Goldman says the earnings are peaking and more challenges are emerging for First Solar. And speaking of Goldman Sachs, the stock hitting an all-time high today. Mike Mayo at Wells Fargo remaining bullish on Goldman, saying the company is his top near-term recommendation. Kelly?
All right, shares of Netflix, meanwhile, are up 60% over the past year. But as new competitors emerge, one of which took Netflix's hottest property, can it possibly continue its streaming stranglehold? Shares are trying to hang on to some gains today. We will dig into it next on Power Lunch.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
I tried a new laxative that's both gentle and fast.
New great-tasting Dalcolac Soft Chews works naturally with the water in your body in as little as 30 minutes. Puts you comfortably in control. New Dalcolac Soft Chews.
Want to sell the best burger in every zip code? Add an employee. Or 10. Then easily and automatically pay your team and file payroll taxes. That means world domination. Or just the West Side.
Run payroll in less than 5 minutes with Intuit QuickBooks.
It's hard work building a successful business. So make sure your payments platform is working just as hard. Adyen opens the door to innovative ways to pay, enhanced customer experiences, and new business opportunities, so you can focus on what you do best, growing your business. Stay a step ahead with the payments platform that adapts and evolves with you. Adyen. Business, not boundaries.
You would think a pan is a pan until Made In came along, and I went, wow, these things are something better.
Those are the pans that we use at Alinea, at one of the best restaurants in the world.
It's built for a home cook like me, but fit for Alinea like him.
You know what's making Sarah's migraine worse?
Okay, let's table that.
But you know what gives her some relief? Using ZocDoc to book a video visit.
You'll get the prescription this afternoon. Does that work?
Yes!
Oh.
ZocDoc makes healthcare easy.
Thursday, Ted Danson is Mr. Mayor.
You're not the mayor. I'm the mayor.
Well, let's just agree to disagree, shall we?
Mayor fight! Mayor fight!
Mr. Mayor premieres Thursday on NBC.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
No more waiting. This year is gonna be different. My New Year's resolution, get happy.
It was time someone made a better wallet, so we did. This is the Ridge. Precisely engineered to fit all your cards and cash in a fraction of the space. And made from military-grade materials, so we can guarantee it for life. Get 10% off today at ridge.com/TV.
Welcome back. Are you still watching? That's the question in Rosenblatt's new streaming survey. And the firm is saying that subscription overload and the loss of The Office are major risks for Netflix. Specifically, 32% of respondents said they're likely to cancel their account over the next 3 months. Here now to discuss is Rosenblatt Securities' Bernie McTernan. Bernie, is that number higher than usual?
Yeah, Kelly, Happy New Year. Thanks for having me on. So in this survey was 32% of, as you said, respondents indicate they plan on canceling their subscription. That's up from about 13% in our prior 4 surveys. And it makes a lot of sense given what's happening with the service right now. So you have The Office leaving, moving to Peacock, as I'm sure you're well aware, and then also the price increase coming up. And then don't forget, too, that a lot of viewers or a lot of respondents were just stuck at home for 9 months. So after, in a post-pandemic world, wanting to get out and do more things. And 65% of respondents indicate that they want to subscribe to less streaming services post-pandemic than they do now.
Yes, which is understandable as they proliferate. Doesn't seem like Netflix is going anywhere, but I still found the following stat very revealing. You said on future price increases, 15% of Netflix respondents said they wouldn't cancel if the price went over $20 a month. Only 6% said that for Disney. So in other words, if I'm Disney and I read the results of your findings, Bernie, I say, wait a minute, I can raise Disney Plus pricing to over $20 a month and only 6% of people even say that they would cancel? That's extraordinary. And what does it tell you about Disney's catalog versus that of Netflix?
Well, I think what it tells you is that 6% of people are willing to pay $20 or more. And that's at this point, too. We think that one of the most interesting things that came out of the Disney Investor Day is really the content overload that's about to happen at Disney Plus. And the key thing is that they were able to get massive subscriber scale in their first year of service with really just using library content. Really, the second half and what we were introduced at the Disney Investor Day is going to be this new original content. Got the Marvel original series hitting the services, more movies hitting the service. And really, we think that's going to drive ultimately a lot more pricing power. And we recently, in one of our Disney notes, walked through the Disney bull case. And part of it, we think the subscriber opportunity for the Disney streaming services is well understood at this point. But the piece that isn't is the pricing power. And when you have them spending, $16 to $18 billion on content throughout their 3 streaming services, and the success that they should have with that content, given their IP, they have the best franchises in the world. That's going to drive a lot of pricing power for the service.
So let's bring it, Bernie, to the bottom line for shares of Netflix. I believe you have a hold on them. It sounds like they're going to have to do a lot of investment content-wise if they want to keep up with the investments that Disney and others are making, but we're used to that from Netflix. So tell me what you think the risks are around the stock and what its valuation is.
Yeah, so we have a hold rating on shares, and it really comes down to you're paying an elevated revenue multiple, so about 8 times NTM revenue for really a mid-teens grower, and that's really as slow as Netflix has been growing really ever. And so we think paying an elevated multiple for that relatively slower growth isn't worth it. But the story is transforming to an earnings story. But what comes with that when you don't have the fast growth is that really what Disney did is I think they're just raising the bar, and really the entrance fee to be competing in the streaming wars is going up. And if Disney's, as I mentioned before, if Disney's spending that much amount of money and should have the highest hit rate in the industry, is Netflix going to have to go from 15 to 18 to 20 to $25 billion in content, where that will stop? So I know a lot of the bulls on the story are focused on unlimited pricing power for Netflix, getting to $30 of earnings at some point. We just think that the risk is to the downside there in terms of, really the upside risk in terms of how much they're going to have to spend in content to drive, the subscriber estimates that we have.
Yeah, no, the results are fascinating. We appreciate you joining us to talk through them. Bernie McTernan of Rosenblatt. Thank you, sir. Tyler?
All righty, the Dow picking up steam this afternoon, gaining back some of yesterday's rather steep losses. We got more in the markets coming up, and don't forget, as you see the Dow up 199, you can always watch or listen to us live on the go, on the app. We'll be right back.
Selling a home is hard, stressful, and can cost thousands, even in the best of times. But today, the best real estate agent matters more than ever. A HomeLight, MoveSafe certified agent sells homes faster for more money and is committed to keeping you and your family safe. From providing things like virtual showings to digital closings and following the most current health guidelines. Is your real estate agent MoveSafe certified? Find out today at HomeLight.com.
Of all the companies on the Fortune 500 in the year 2000, more than half no longer exist. Digital transformation isn't just a good idea. It's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3.ai. This is Enterprise AI.
Online dating? My buddy met a nice woman that way, but I'm not really sure where to look.
Pick up your phone, go to OurTime.com, just take a look. It's easy to take a look on Our Time, the dating site for people over 50.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.